The housing market has been an absolute roller coaster for years, right? But something surprising is starting to happen in Kansas City that has a lot of people hitting the brakes. So, we're going to dive into the data and figure out what this signal really means for both buyers and sellers.
All right, take a good look at this number, 45.2%. What on earth could that possibly represent in a housing market that's been absolutely red hot for so long?
Yep, you saw that right. In just 1 week, nearly half of all home sellers in the Kansas City area dropped their asking price. We're not talking about a small tremor here. This is a pretty significant signal that the ground is shifting under our feet. So, naturally, this brings up the big question. With so many sellers slashing prices, are the days of insane bidding wars and offers way over asking finally coming to an end? Let's dig into it. Okay, first up, we need to really understand what this shift is all about. It's not so much a crash as it is a recalibration. Think of it like the market is finally just catching its breath after an all-out sprint. And hey, it's not just about those price cuts. Another huge clue is how long homes are just sitting there. The median time is now 63 days. That's a whole week longer than this time last year. That 12.5% jump is a super clear sign that buyers just aren't feeling that same frantic pressure to pounce on a property anymore. To really get what's going on here, we have to go back to basics. Economics 101, right? It all boils down to that classic tug of war between how many homes are for sale versus how many people actually want to buy them. So let's start with one side of the rope, supply. Active listings are up almost 9% compared to last year. And it's pretty simple, really. More homes on the market means more choice for buyers. But here's the flip side. While supply is up, the pace of sales, what the industry calls absorption, is actually down 11%. And when you have more homes for sale and fewer being snapped up each week, well, you get this imbalance that starts putting the pressure back on sellers. This leads us to a really crucial term in real estate, months of supply. It's a pretty simple concept. If not a single new house was listed, how long would it take to sell everything that's currently on the market? Generally, a healthy balanced market has about 4 to 6 months of supply. All right, so where is Kansas City at? 2.3 months. Now, let's be super clear, that is still technically a seller's market, no question. But the number itself isn't the whole story here, it's the trend that really matters. That number has been steadily creeping up, shifting the entire playing field closer to an even match. Okay, so this is where things get a little weird. It's a bit of a paradox, really. If nearly half of all sellers are cutting their prices, you'd probably expect the overall market price to be tanking, right? Well, that's not quite what's happening. In fact, get this, the median list price is actually up a tiny bit, 0.5%, compared to last year. It's basically holding steady. So what gives? How can prices be falling and stable all at the same time? The answer is all about the difference between the market average and the strategy of individual sellers. See, the median price for the entire market is holding its ground. But within that market, you have all these individual sellers who may be priced a little too high at first, and now they're making smart cuts to attract buyers who are being a lot more careful. And as Housing Wire puts it, this isn't about panic. It's a recognition of shifting market dynamics. Sellers are just getting savvy. They're adapting to a market that is no longer moving at 100 miles an hour. So is this slowdown just a Kansas City thing, or is it part of a much bigger trend? To figure that out, we've got to zoom out and see how KC stacks up against the rest of Missouri and, well, the entire country. This table really puts it all in perspective. You can see right away that Kansas City's market, with just 2.3 months of supply, is actually tighter than both the state and the national averages. And yeah, prices are higher here than the Missouri average, but they're still a pretty good deal compared to the U.S. median. And on top of that, homes here sell about 2 weeks faster than they do nationwide. So the crucial takeaways are really clear. Even with things cooling off, Kansas City's market is still relatively tight and fast-moving. It offers this compelling middle ground, more affordable than the national average, but still a really dynamic, valuable market. Okay, let's pull all this data together. What does this new reality, this recalibration, actually mean for you, whether you're looking to buy or sell a home? And that brings us right back to that key term, market recalibration. It is the perfect description for this moment. It's an adjustment where sellers get more realistic to meet more cautious buyers, all without the market actually collapsing. It's really just about finding a new, more sustainable balance. In the real world, This means for sellers, you can't just name any price anymore and expect a bidding war. You have to be strategic right from the get-go. And for buyers, it means a little more breathing room, a few more choices, and definitely a bit more power at the negotiating table. The bottom line is that extreme seller's advantage we saw is finally starting to soften. So after looking at all this data, the price cuts, the inventory, the days on market, what is the single most important thing to understand about the Kansas City housing market right now? This is it, right here. The market is just shifting from an unsustainable sprint to a more manageable pace. This isn't a crash, it's a normalization, it's an adjustment. And frankly, it's a much-needed deep breath for everyone involved. And all of this leaves us with one final crucial question to chew on. We're watching this slow dance between supply and demand, and the balance of power is slowly shifting. So the real question isn't just if it will continue to shift toward buyers, but how much more negotiating power will they get, and what opportunities and risks will that create for anyone looking to make a move in the year ahead.